Today's topic, Insurance 101 for Physicians in Training. One of my absolute favorite topics for numerous reasons. One, it's an important topic. As a physician, risk management is a huge part of your financial plan, even while you're in training. More importantly, it's one of my first true loves and first introductions into working with Gen X and Gen Y physicians because we were invited to speak over at Jefferson here in Philadelphia to the psychiatry program to talk about these exact topics. And the reason why they invited us, because we don't sell products, but we could actually provide details and help them make good decisions. So in this video today, we will talk through the famous disability insurance. We'll talk through health insurance and HSAs. I'll go through life insurance and talking about that evil permanent life insurance. I'll even get into other things such as identity theft protection. We'll do a little bit of estate documents towards the end, but we'll really walk through the main forms of insurance and risk management, even umbrella insurance. So we're going to walk through a lot of vital insurances. Most of them probably pertain to you, maybe some don't, just depending on your situation, but it'll be a very good introduction to any type of risk management for our physicians in training, or even if you're a newer attending, you could certainly plug a lot of these main topics in to make sure that you're covering all your bases as well. So stay tuned. That is all coming up next. Okay, first insurance that is up is health insurance. Bet you didn't see that one coming. Bet you thought it was going to be disability, didn't you? No, we're going to start with health insurance because it's one that we all, hopefully, we all have in place, and it's part of our open enrollment. If you're a locums physician, again, remember, you're kind of in charge here, putting all these benefits in place for yourself. But health insurance, you're a physician. You know the importance of health insurance. I know you don't set the billing, even though sometimes angry patients try to assume that you're the one that did that. We know that there's some much bigger issues at play there than what you're doing. You're just actually helping in so many different ways, but we always assume that bill comes back to the physician when we know that there's many other issues on the higher hospital level that are leading to that. And also we can plug in the insurance industry here too. But with that said, the main point there being, it costs a lot of money to walk into a hospital. It's very expensive. I even, one of our very popular blog posts when we had our first child was I put a screenshot of the total cost to have our first child. Very normal pregnancy, very quick pregnancy. Everything went, it was a blessing, and when everything was perfect, still cost over $30,000 was the total bill through that. So again, it costs a lot of money to walk in there. So why is health insurance important? Well, if you don't have that health insurance, you're on the hook for paying that out of pocket. And if you look up the horror stories out there of why people are usually in very, very bad debt situations, one of the top two reasons is usually because of a medical event. So more of the story here, have good health insurance. Take open enrollment serious. Understand the different plans. If a high deductible plan makes sense for you and your family, you could also get the benefit of an HSA. And an HSA is a great tool. I consider it more of an investment tool, but more importantly, it gives you a triple tax benefit. Tax deduction going in, tax deferred while it's in there, and completely tax-free if you use it for anything anything health related. But neat little trick here, we call it the stealth IRA. If you use it for anything after 65 and it's not health related, you only pay ordinary income tax. Essentially, it's a bonus IRA, not a Roth IRA, but a traditional IRA. Tax deduction going in, tax-free growth, pay ordinary income tax on the way out. So read through your open enrollment packet, understand your benefits. Some years maybe a high deductible plan will make sense, maybe it won't. And the one thing I'm always still amazed on too is by how many clients are not all on one plan. While it's two individuals, just you and your spouse, there I could get it. But when you start to add a family in there, remember your deductibles, your max out of pocket will have family limits. So if you go to the doctor, if your spouse goes to the doctor, if your child or children go to the doctors for just different miscellaneous things, you're still adding to that total. So by the end of the year, you could have, free health care by that point because you hit your out-of-pocket maximum. So just keep those in mind. Again, the main thing with health insurance is if you're working with an employer, take your open enrollment time, your open enrollment period, very serious. Read through those. If you're a locums physician or just self-employed, make sure you understand your coverages. And again, you have that same opportunity every year to update your own personal plan as well. So please take health insurance very serious, as it will keep one of your possibly largest bills on the insurer side, not on your side. So first one, health insurance. Next up, life insurance. I know, again, you're thinking it was going to be disability, didn't you? Nope, life insurance. So with life insurance, I'm going to assume that you know who Dr. Dolly is, the white coat investor, and you probably know how most of the advisors on his website, I will describe it as that, think about permanent life insurance. Could it fit some unique circumstances? It could, but for most, it's not going to be needed. Or it's just too much too early in the game, and that's where I usually get upset. I think it's sold inappropriately when individuals should not be being sold permanent life insurance. That's my biggest issue with it. But neither here nor there. Let's talk through it. So life insurance, single individual. No one's relying on your income. No spouse, you're not helping parents or family. No one co-signed on your loans. That's always a tricky one. No one co-signed on your loans. In that example, you might not need life insurance. Now, could you make the case you're young and healthy right now, and could you lock in a low cost because down the road, maybe when you get married, you have kids, what if there's a health event that pops up and you're not insurable? Well, then you're kind of trapped. Yeah, you could make that case. And if you're very risk averse, maybe in that situation, you do start to add in some term life insurance at that point. Soon as someone starts relying on your income, that is where term life insurance should start to really kind of move up your to-do list, right? You plug in kids, I think this is a no-brainer. You need to have term life insurance. And not only do you need to have term life insurance, I'm always amazed by how many assume that it's like $1 million. Take your annual income as a physician at a base, say, multiply it by 10. Plug in your mortgage, plug in student loans, again, assuming some code sign. What do you want for your kids' K through 12 education, their college education? You take all those numbers together. When we're speaking to different training programs, we'll say, hey, it's not uncommon for you to probably need $3 to $4 million of term life insurance. And I know that might sound like a lot, but I can tell you if we do a needs analysis or a gap analysis, it's likely going to fit very nicely in there. So for life insurance, the more individuals that are reliant on your income, this needs to be a top priority. Again, single, no one relying on you, no one co-sign, maybe not a big deal there. Someone is relying on your income but no kids yet, again, I still think you can start to introduce the idea of life insurance is important here. Plug in children, this is, now we're at a multiple of $1 million, I think, in this example. Now, I don't want to talk horribly on permanent life insurance. In certain circumstances, does it make sense? It can. In very unique circumstances, it can. But you need to understand the pros and cons. Like I said, my biggest issue is it's sold inappropriately to young physicians when they're trying to pay off their student loans. They're trying to finally do a Roth IRA. They're trying to save for their home. They're trying to get some money into their kids' 529 plan. But yet they have thousands of dollars per month going to this whole life insurance because it combines savings with life insurance. That's where I get upset. So moral of the story, life insurance is important. It's probably much more important for some of you than others. That one could evolve, though, over your time frame. So keep that in mind, too. With one child, you might need X amount of insurance. With 4 kids, you might need a lot more. Keep that in mind, and there'll be periods of time where you could be self-insured. Now, with term life insurance, obviously, you're probably not going to cancel term life insurance. I'll probably just let it run its path there, 10, a 20, a 30-year term. But life insurance is important. It's just going to be more important for some of you than others. And for the most part, I'm comfortable saying this, term life insurance is likely the best option for most of you watching this. A very, very small subsector can make an argument, but if you're going to make that argument to me, you got to understand the pros and cons, because there are pros and cons to that side of it. Next up, you were waiting for it. Here it is. Disability insurance. All right. Disability insurance is vital for physicians. And here is the very simple explanation why. As you sit there right now, what is your biggest asset? More than likely, what's your biggest asset? Give you a second, think through it. The answer is your ability to wake up and go to work as a physician every day, because your salary is 6 figures. take that salary times many years. It is a large asset, and we forget about that. We don't think of it that way, but that is how you have to think about it. So this is why disability insurance is vital. You probably are getting some through the current hospital that you're working at. It's not enough, and more than likely the definition of ONOC is very weak. It could be horrible, which we call ENEOC. It could be something called modified ONOC, which is just saying, hey, ONOC for a period of like 2 years or so is very common. You need a true ONOC policy, and you likely need higher limits than also what your employer plans offering you. And for the most part, if your employer pays for it, don't forget it's also taxable. So when it says $10,000, it might only be really $7,000 because you still got to pay Uncle Sam every dollar that comes in. Private policy, that's not the case. You paid with post-tax dollars, so you now get post-tax benefits for that. So keep that in mind. Disability insurance. As we sit here now, towards the end of 2021, there are 6 good true ONOC providers. We list them in here, and I'm going to read them because if not, I'll probably stumble and get lost. I'm going to read them off though. Berkshire, Standard, Principal, Emeritus, Mass Mutual, Ohio National, aka the Big 6. Can that change? It certainly can change, but those are your current Big 6 right now. So you're looking for true ONOC. We put a few tips in here. So one of my favorite tips, especially to our in-training physicians, is for female docs. See if your program offers something called a GSI, Guaranteed Standard Issue. Why is this important? One, if you have any bad health items behind you, it's essentially a very, very low underwriting. As long as you really haven't been declined before, you're going to be able to get a policy here. But the most important part of this is they will offer what's called unisex rates. And that's important because females have higher rates for disability insurance by a decent bit too. So with this, you can lock in a unisex rate. And while you can only add so much to these policies, it's a really good base for you to build on going forward. So female physicians, keep an eye out for something called your GSI policy. Again, you can talk to HR about this. The other thing to keep an eye out, if you're a male physician, but you do have a bad medical history, this could give you an opportunity to get good disability in place before you head out into the regular world where they likely are not going to offer you GSI policies. Those should be the main. I'm using my blog post down here below. So if you see my eyes bounce, I'm just trying to follow my main cues here. But those are the main things to keep in mind. Remember, there's a lot of riders on disability insurance too, so always understand what those riders mean. Some you need, some you don't. Some are, I would say, some are, I don't want to say inappropriately sold, but maybe added on where you don't know all the benefits. And remember, the higher your premium goes up, whoever the broker is selling that gets a higher commission. Not saying that's their goal, but just keep that in mind. So understand what all the riders mean. Walk through those, understand them, and just see, does that make sense for you? Should you add that? Should you not add that? But disability insurance, by far, is one of the most important insurances for physicians in training. I would argue this is like a top 3. Like health insurance, disability are really one and two there. Maybe you can rotate, and then the third one kind of probably just more or less rotates depending on your family situation. But disability is a must, and keep in mind, more than likely, your group plan is not going to do it for you. And you may have access to a good GSI policy or even possibly some discounts to lock in before you head into the attending world. So check on that before you hit the attending world. But number 3, disability insurance, it is important. All right, next up, homeowners insurance, renters insurance. I will not go through all the details here, and I'll be honest with you, it's because I don't even know how all the actual parts of these insurances work. And this is where I say it's called P&C insurance, property and casualty, and that's just a license I never got. So this is one that we usually reach out to your P&C agent and trust their judgment, walk through the pros and cons. But this is also where we come back to the main thing that we always look at. Find an independent agent and get numerous quotes. Spreadsheet them. See how they all look. Have them explain them to you. But for all intents and purposes, you need homeowners insurance. You certainly need homeowners insurance. You also need renters insurance as well. So if you're currently renting, all that stuff in your house, if it was just completely gone tomorrow, would you be okay? You would say no, right? You need some type of renter's insurance in there. So just keep in mind, renter's insurance, homeowners insurance are both really important pieces of the insurance puzzle, but you should also use an independent agent to make sure you're getting a fair quote. And I will say this is one type of insurance where usually every 5 years, I know it's not exciting, and I always say this is one thing that I don't do that well either. This is one of my weak spots for my own personal financial plan is you should go get new quotes, because what we've seen traditionally is you kind of get in the habit of paying those premiums. They increase them a little bit. They increase a little bit. They know that no one wants to go shop it, so they keep increasing your premiums a little bit. So keep an eye on this. But homeowners, renters insurance, vital insurance here, because again, it's protecting your home, all the belongings in your home, or from a renter's perspective, all the things inside your current home that you're renting. So number 4, I believe we're on, homeowners/renters insurance. Okay, number 5, I believe we're on now, is auto insurance. So with auto insurance, again, another topic that falls under P&C, property and casualty insurance. I'm not going to get into the details of it, but here's the moral of the story. You need auto insurance, okay? If you have a car, you need auto insurance. The unique thing here, too, is the limits can vary from one state to the next. So this is another good one to find a good independent property and casualty agent, a P&C agent. And this could be, maybe it's one of the bigger brands, like a State Farm. Maybe it's more of like a smaller brand, like an Erie, if you're here in the Northeast. It depends. So make sure you find a good independent agent, spreadsheet your home and auto, spreadsheet your auto. What did I say? Home and renters and auto. But also other insurances that I won't talk through on this, but if you're not bundled, if you're not all in one location, you can probably get yourself a good discount. So if you have a personal articles policy, I usually use like engagement rings is the most common there. If you have any art or jewelry that you actually insured on personal articles, another thing that you can bundle. An umbrella policy, which I'm going to hit next, that could also be bundled. So one other thing to add into the property and casualty section is if you don't have everything at one insurer, I would look to do that because you're probably going to save a few bucks by just bundling everything. So number 5 here, auto insurance. Number 6, umbrella insurance. The one insurance that probably does not get enough love, but I can tell you it is literally built into every single financial plan that we build. Umbrella insurance is extra liability protection. It's extra liability coverage on your home or renters and your car. Why is this important? Well, I always say as a physician, you unfortunately get an extra target on your back. So if someone gets hurt in your home or you hurt someone with your car, they get a decent attorney, they find out that you're a very good physician, all of a sudden the soccer flop happens. If you're not familiar with a soccer flop, if you're a soccer player, please don't take this the wrong way. It's when they kind of get brushed against their leg, but you would think someone actually chainsawed their entire leg off and they flop around a lot more than probably what was needed. So in this example, soccer flop comes in, they sue you for a large amount. Now, you have to lose, they have to win, and that's where things can start to go bad. So what happens is with an umbrella policy, it's adding extra liability coverage for you. So our number one goal, at least when we build a plan, is we're always trying to cover your net worth with the umbrella policy. But we round up to the nearest million, and you're probably thinking that seems like a large number. It is, but umbrella insurance is very low cost for the most part. My best average from working with hundreds of households at this point is around $1 million should cost around $200 per year. Sometimes it's a little bit lower. Sometimes it can be a little bit higher, just depending on your certain circumstances. But either way, I think that's a very fair average that I'm still holding up with for the past 10 years. I think that's been like a good number. Obviously, inflation's moved it a little bit. But umbrella insurance should be built into your financial plan. Even if you're only renting, I still think an umbrella policy makes a lot of sense here because it's just very cost effective. So if you don't have it, look to add it sooner than later. But umbrella insurance, our number 6 insurance that we're talking through, is very, very important. I'd even argue it's vital for the physician community. Next up, I'm just going to give you a little note here on where to buy it, right? So I think the best resource for physicians, and it's because Dr. Dolly is just a trusted resource, would be the White Coat Investor website. If you click on his recommended tab, you'll see insurance agents on there. Especially for the term life insurance and disability insurance, there are some fantastic insurers on there. Larry Keller is the name that you all probably see. Scott Nelson Archer and his business partner Amber. There's a great team out in Philadelphia here. There's just very good insurance brokers vetted very well through Dr. Dolly that are on that website. And I always, even clients that reach out to us, prospective clients that reach out to us that I think are going to be a good fit, or maybe they come to us maybe a little bit too early and they just don't need a full plan yet. We'll lead them to that same spot because again, at a bare minimum, you probably need disability insurance, but you can find some bad brokers out there. So I think that website that website referring to Dr. Dolly, the White Coat Investors website, I think that website does just a fantastic job showing you some of the top brokers out there who are truly independent, who will spreadsheet it, not only just spreadsheet it. That's one of my other pet peeves is when they do just spreadsheet it. They send you the spreadsheet and say, pick which one you want, because by default you're going to choose the lowest cost, but is not always the case. Which is why working with a Larry or a Scott or an Amber, you need someone to walk you through it. You need to understand why maybe this one's a little bit higher, but it makes more sense for you. Or maybe this is the lowest cost option, but here's why this is your best option. That's where I think a true professional insurance broker really can stand out from the rest. So just wanted to put a little note in there because I think we sometimes get lost on where do we go? Where do we even find this stuff? And that's more, again, that's really looking towards term and life insurance, which I think are probably the most common questions. But on the homeowners, auto, umbrella, that personal side, what we call property and casualty, P&C insurance, that's where I would look to find a local agent who's independent and can spreadsheet numerous companies. You can even look to a State Farm. They won't be on those independent spreadsheets because they're essentially a captive agency. They can only write their own insurance. So, but still, I think it's fair to get a good estimate from them, but also maybe some other providers. So just wanted to give you a few spots to look at, and then that should give you a good starting spot. All right, last but not least, I'm just going to put two items on here that I don't plug in perfectly to insurance, but are vital. One is identity theft protection. This is one where playing offense is going to be really helpful. Defense, you might be too late. You could be in trouble here. So the two tidbits that I give all of our clients is, the first one is I know it can be a pain in the butt sometimes, but I personally think that everyone should freeze their credit. I think you should freeze your credit so that no one can get access to that and open up new accounts in your name. I think that is the best form of defense. Now, here's why I said it's a pain in the butt. Because if you ever go to buy a new car, refinance your mortgage, try to get a credit limit increase on your credit card, you need to make sure you go in and unlock it. Because if not, no one can get to it, which should show you that it actually does work though, right? It works pretty good. But that is step one. The other thing is, look to get some type of personal monitoring, like a Norton LifeLock, some type of ID monitoring. There's even one through Costco at a pretty good point. I believe Norton's LifeLock is continuing like one of the top, and I just know it from, that's what our family utilizes as well, just to kind of keep an eye on things. So just keep that in mind. I think that's one form of, we'll call it insurance that's overlooked, but look to possibly freeze your credit. But more importantly, if you're not doing that, always keep an eye on one free one you can look at is your credit score. Most credit cards today will let you track your credit score. The only downside is when you see your credit score go down, likely it's too late, right? Now you're going back to trying to play defense. You weren't ahead of it. So that's why I don't love that, but something like a Norton LifeLock can also jump in there and just keep you up to date with things. And then the other one we add on here, again, not insurance per se, but really important to the overall risk management side of it, your estate documents. Now, again, if you're a single individual, can I understand if you drag your feet? Sure, I get it. But I will say these are still important. And really what we consider the main four are your will, your living will, healthcare power of attorney, financial power of attorney. Depending on your net worth, depending on your state, could this get a lot more complicated? Of course it could. I mean, even if you have a state that doesn't have a very good probate process, you could introduce a living will almost immediately here. Your net worth is growing to a higher number, millions of dollars here. Your estate plan is going to get a lot more complicated. But a bare minimum, I at least want to put on your radar, estate planning documents are vital and commonly overlooked. So just keep that in mind as well. And there you have it. Insurance 101 for physicians in training. We covered them all. We got health insurance, we got life insurance, we got disability, we got home and renters and auto and umbrella. What am I missing? Did I get them all? I did. And then identity theft and estate documents to end it out there. So more importantly, like I said, some of these will move up and down your priority list just depending on your situation. But all of these at least need to be on your radar in some capacity. I mean, heck, you could argue some of you may have all of these in place. Eventually, probably all of you will have all of these in place. So as always, Thank you so much for tuning in. We hope this was helpful. We'll plug in the blog post as well, which will just give you a little bit more detail as opposed to me walking through it on the video format side of things. As we come to a close here, as I always ask, if you wouldn't mind clicking on the like button, that will help this video get a little bit more love. Share it with some more physicians out there so that we can help more. If you have not subscribed to our channel, click on the subscribe button. Anytime we send out a new video, you'll get a little notification to let you know, hey, new content's out there from WealthKeel. But as always, thank you so much for jumping on here. I hope you enjoyed this video, and we'll catch you on the next video.